guys, so quickly I'm going to go over Euro USD on the daily. So what we're going to do is identify patterns and then talk about key levels and entries and targets. So right now I can see that there's an M pattern forming. I don't want you guys to go all the way back. Like some people go all the way back here and it's like, and they start marking up every level. You don't want to do that. You want to mark up closest to price like I've said in previous videos, okay? So just look at current price action. You can back up like here, but that's enough. Like don't go crazy. So let's see. So current price action is at 1.112, okay? So what we see here is we see an M pattern. So impulse, okay, and then what we're creating is we had a huge move down, we're correcting, and then look, we make a W pattern. So these are really good patterns to identify, as well as double tops. So I changed my colors, by the way, for my resistance and support. I've mentioned that earlier on in the video as well. So resistance, double top, double bottom, okay? And then as well as the M and W patterns. So what price do we enter on? What we do is we take our horizontal ray, line chart, points, and we round, okay? So it's at 111,725. So this is the thing. This is what I go by. I go by 0, 0, 200, 500, and 800, okay? If price isn't close at all to these levels, like for example, it's at 111,725, okay? So let's round it to 8, for example, because it's rather than 500, it's closest to 8. So let's round it to 8. So it did to the T respect that 111.8, but again, I like them close to the bodies. Okay, so 111.7 would be better. Okay, so as long as you're rounding it, it's fine. And then also, for example, I go 0, 25, 50, 75. So let's say price is at 125, 46. Okay, so closest to that would be 125, 500. But let's say that 125, 500 key level is covering the bodies and you don't want to cut off the bodies, okay? So let's say it's cutting off the bodies, then the closest round number to 125, 446 would be 125, 450, okay? And that would make more sense. So always round the numbers. So we have 111,700. Okay, so we have a double top here. So immediately we can be like, okay, price respected the 111,700. So then we can take a short. You can enter a limit order if you want, whatever you want to do. 700, and then your stop loss below. So it depends on what time frame you are taking the entry off. If you're taking it off a higher time frame, you can put it 30 to 40 pips. But if you're taking it off the 5-minute or 15-minute, you can put it a little closer depending on what price action is telling you on that 15-minute time frame. The whole purpose is you do not want to get stopped out. So you don't want to make it like a 5 pip or 10 pip stop loss. But again, it depends on what time frame you are entering on. So just be aware of that. So I usually make mine 30 to 40 pips, okay? Because look, right here especially, it try to stop people out there. Kind of looks like manipulation as well, but anyway, same idea. So what happened is we took that sell at that 111,700. So the first target would be here because the market previously failed. And if you can look left, we can see 1, 2, 3, 4, 5, 6. Like literally this is a really good key level. So again, what do? We go to line chart, 1 point, 2 point, let's move it up, 3, 4, 5. back to candlestick chart. So it's kind of cutting that. So we have to make it lower. So 101.07, let's try 50. Okay, so that's a good level. That's, let's see. That's fine because here, like I said, it's going to cut off some candlesticks, but it has to make sense. This makes sense because it's consolidating here and then boom. Oops. So, I mean, again, 750 works because let's say you went to 800. It's cutting off too much. Okay. It's just 750. You just kind of, you have to work with it, right? Like you have to see what works best. So it's not going to be that, like it's not going to be 800, 500, 200 every single time. You just have to see, okay, what works best, what price is it exactly rejecting off of, okay? So this works. So what happened here? I'm going to get rid of this for a second. So what happened here? Bearish candle, then it broke through, tested this zone. So that's why I put the zones in place, because anywhere around this level, sometimes it doesn't go right to 107.50. Sometimes it will go, for example, like a couple pips up, like 10 to 15 pips up, which is fine. But again, you can catch those moves on the lower time frames to see what exactly is going on. So then I just draw a zone. So what happened is it rejected and it closed below this price. So then it dropped, okay? Then it reversed to this price, dropped again. Then what happened? It cannot break this level right here, okay? So what we do, horizontal ray, line chart. And then just round. So let's see what even looks like. Perfect. So we have a key level at 1.0 even. Again, I changed my colors just so it makes sense. Okay, so we had, so price respected here. It did not break below successfully that 1.10 key level. It wicked. The wicks are fine, but the bodies is what tells you like what's going to happen basically. So the wicks tried to break below, closed above. Same with here, tried to break below, closed above, and then went up. Also making a W pattern, also a double bottom. So at that 1.10, we can take that trade. So from here, like from that 1.117 here, I'll enter it again. Ignore the stop loss for now. Just, okay, so it broke this level, right? So even at this level, it's a 1 to 3. So 1 to 3 is good. Minimum 1 to 3, great. Okay, so then it continues down, right? So we have kind of a break right here, then a retest of this structure. Okay, so it matches up perfectly. So came down, one sec. Broke through, tested, came down, not enough bearish momentum, not enough sellers, price pushed through, tested, boom. Okay, so then here we have a resistance level here. Again, we can highlight it. Resistance, so tested this structure, 1.10750, then dropped to 1.10 even. Came back up to that exact key level again, came back down, so on and so on. Like it repeats itself every single time. So as you can see, like you could have held, it's up to you. When you see the market reversing, you can get out. I mean, that's a 1 to 5. That's a 170 pip move. So it's up to you. You can hold it as long as it doesn't break above this key level zone, then it's going to come back down. So sometimes it moves further, right? Like sometimes it could go to this level, but instead it respected this previous structure, okay? So it basically reversed. So what you can do is you can enter a buy position because you can see that, okay, it's a double bottom and it's forming a W bottom. Like, you just have to watch. Like, your bias can be, okay, it's still going to be short because it corrected. It's still going to be short and you could hold your position. But when you see price action change, you have to change with it. Like, you have to monitor it and stick to it, right? So your bias could be a certain thing in your head, and then that's the hardest part, is your bias could be, okay, it's going to keep going, it's going to keep going. But if price action is telling you different, you have to follow it. So let's say it corrected here, and you held it from here, and it corrected here, and it kept dropping. As soon as you can see that this is a level that it is respecting and not breaking through, you can get out of that sell. Or there's a couple things. Keep your stop loss here at break even, and if it touches that, obviously it did, then you're out of that. But again, this is the daily time frame, so this is a long-term move. But I'm just saying, there's a couple ways to do it. So you can hold that trade until you break even. You can put your stop loss around this level to catch some profits. Like, it's totally up to you and whatever works best. Everything is different for each person because of just how they are. So there's different trading styles for people. Like, not this, like, the trying to catch my words here. Each trading style works differently for each person. Like, I could swing and someone else could just scalp. So it all depends on the person. So anyways, back to this, the price reverse. So on that level at 1.10, let me take a long. Stop loss below. Oh, I hate when it does that. Okay. And then again, so our first, so this is a 1 to 2. I mean, you can catch 1 to 2s, but 1 to 3s, that's the minimum I'll go. But again, it depends on what the price is showing you. So this would be your first target. So it hit it, went above, then closed. Try to fake people out around this, because basically people would see this sell candle and be like, okay, it's going to go back down, and then it reverses, right? So that's why candlestick analysis actually comes last, because candlesticks can fake you out so easily. So that's what it comes down to, is the key levels. So it tests this key level, then comes up again, tests one more time, and then goes back up to the 111,700. So 111,700 would be your target. If it breaks above and you can see bullish momentum in a strong candle body close above 111, it's going to the next and the next and the next, okay? In this case, it wicked past, stopped people out, came back and tested that structure, and then dropped. So then again, you can take an entry at that 111,700. So again, it's just repeating itself every single time, and you're just learning how to read the market and catch these moves. That's all. Okay, so another thing, when you're adding extra confluence, is fibs. So low to high. Okay, so we can see 100% at the bottom, 0% at the top, and then this retrace. So so again, it's respecting structure from here, and it also is going off the 61.8 retracement level. So 61.8 is the best, because from 61.8, that was like almost 200 pips. Actually, with the wick, I think it was. Yeah, over 200 pips. So that fib levels work really good with key levels. So you just have to know how to use them properly. And some people don't understand like where the lows and highs are. Guys, you just this low, high. Okay? So same thing with here. Low, high, low, high, and then that's your retracement. So fibs work for retracement levels for that next confirmation. So low, highest point pointed here. Wicks only, not candle bodies, wicks, because that's where price printed. So 100%, 0%, corrected to the 38.2, kind of tapped between 50 to 61.8, and then closed above the 38.2, and then went to the negative 27%, and then literally touched it at 61.8. So that key level would be around 1.12 even. So they work really well, really well. You just need to make sure you know how to use them. But again, they're not needed. Like this, all you need is key levels. That's it. So, and patterns work well too.